Hello everyone, welcome to the market outlook for the week. Gaurang Shah here from Geojit Financial Services, and as we restart the week this Monday morning at around about 11:30, a little bit of red on the screen, continuation from last week's correction. We did open up with a little bit of flat to positive bias, but as the day has progressed, we've seen a little bit of red on across all the indices, both uh, Sensex, Nifty, Nifty Bank, and sectorial indices. To give you certain levels on the Sensex, Nifty, Nifty Bank, and of course rupee dollar and crude oil, Sensex is down about 235 odd points this Monday morning at around about 11:50, 11:30. And the level is 65,775 on the Sensex. The Nifty spot down about 70 odd points, 19,605 is the level on Nifty spot. And Nifty Bank down about 190 odd points, 44,425 is the level on Nifty Bank. On the rupee dollar equation, little bit of weakness. Rupee has reached the level of 83.10 against a dollar. Signs of concerns continuing on the currency front as well, and on the crude oil energy basket. Though the levels are down, but it is elevated. $93.50 a barrel, that is Brent, and $90.20 a barrel, and that is NYMEX. Elevated levels both on crude oil as well as depreciating rupee against the dollar is a cause of concern, and that is also an overhang on the market. On the outlook for the week, Thursday we'll see the monthly expiry for the F&O segment, which is likely to keep the markets choppy as and when we approach the day of expiry, that is on Thursday. The episode or the events which have happened since 1st of September, and we mentioned this last week also, friends, expect a little bit of profit booking and correction in the market, and we've seen a decent amount of correction coming in on all indices across Sensex, Nifty, Nifty Bank, as well as sectorial indices. So on 1st of September, we did mention last week, we were on 19,260. From there, somewhere around 15th and 16th of September, we saw a level of 20,200. And from those levels of 20,200, following week, that is on 18th of September onwards last week, we saw a correction, and currently we are at 19,600 or thereabouts. So we've seen a decent correction of that entire gain of 14 or 15 odd days from 1st of September to 15th or 16th of September, and then this correction. Our view is that we could possibly find base somewhere around these levels, but because of the F&O expiry, there will be choppiness and volatility. News flows from across the globe, of course, the US Fed, central banks across the globe taking a view on where their inflation is and where the interest rates are and what needs to be done, has kept the markets a little bit under the weather. And I think this is possibly now done and dusted. Starting first weekend October, early second week October, we will see a curtain raiser for the second quarter earnings, and possibly we'll take a cue in a direction from that, depending upon sectorally which companies deliver what kind of numbers. But of course, there will be some amount of direction from second quarter earnings. Expectation is that there should be some amount of direction in form of the IPOs that are going to hit the market. Well, what I'm given to understand is that this week there are close to about 15 to 18 odd IPOs which are likely to open. One IPO which has opened today, that is JSW Infra. We have a subscribe recommendation over there from a long-term point of view. And this is going to keep the fresh paper market quite active with the kind of IPOs that are lined up. Expect consolidation to be the order of the day. Last week did we mentioned that FI sales numbers should increase, and we saw entire week FIs have sold, but the domestic institutions have bought that, and possibly some kind of cushioning in form of lower level buy should restrict the downside going forward from here on. Don't expect much of action, but yes, Lower level buying will be visible. Broader markets, mid cap and small cap still remains a little bit of question mark. So one should possibly be a little bit cautious buying into small cap universe, especially. Don't expect to make profits buying anything and everything. Our advice would be to focus on sector and thereby company specific investment is what is advised. And if you don't want to venture out into something untowards in the broader markets, well, large cap is always preferred. We've always maintained that you should buy quality, don't buy quantity. Uh, we do give out recommendations every week, and two recommendations this time on Monday. First one is from the FMCG pack, Godrej Consumer Products Limited, a very well-known name in the FMCG sector, have multiple products across different offerings, and a decent shelf life as well as strong market share in terms of power brands. Uh, there would be a question that deficit rainfall will it hamper the semi-urban and rural demand, but our sense is that not looking at from a short-term point of view, if we look at from long-term point of view, then India has been a consumption-driven story, is and will always remain. And strong companies like Godrej Consumer Products, which come from a very dedicated corporate house, are likely to do well. So Godrej Consumer Products is the first one. Second one, friends, is from the banking pack, large private sector bank, which saw correction last week on fallback of certain reports. We have maintained our positive stance on HDFC Bank earlier. Even last week, we reiterate our commitment from a long-term point of view on HDFC Bank. And given the correction that we've seen last week and today, our sense is that it's a great opportunity for long-term investors to start investing into HDFC Bank from a long-term point of view. Mind you, friends, these recommendations, both of them, are fundamental from a long-term time horizon. By default, you need to have at least 1.5 year plus kind of time horizon. And as always, don't rush into it. Start buying at current levels and in staggered manner. Whenever you get correction in these two names, you can add to both these names from a long-term point of view. Thank you very much for your patience hearing, and I'll see you again next week. Till then, take care. Bye-bye.